Hey CEOs, here we are again with our estimated tax payment calculator for 2026. We have the 2025 calculator on the channel, and if you saw that and you know how useful it was, I made this one a lot better. I just keep listening to you all and improving on the calculator. So I'm really excited to show you what I have here, especially for those of you that are married filing joint. I have made some improvements to that tab. So please listen all the way to the end so that you get all of the benefits, especially if you're married filing joint. So let's kind of talk about taxes. Right now, you're a business owner. You may have already filed your tax return or you may have filed an extension, and you're dealing with the potential tax bill for 2025. That's not what we're talking about here today. We are talking about resetting and looking at 2026 on its own. What do you need to pay on a quarterly basis, an estimated tax for your business so that you don't get that big bill at the end of the year? That's what we're trying to mitigate here. So let's jump right in. How I set up the tax calculator. You can download this for free right in the description. What I've done is I've separated it out depending on your filing status and the type of business you have. So we pay three different taxes, right? We pay the federal taxes and we pay estimated federal taxes, then we pay self-employment taxes, which is 15.3%. And then you're going to pay, likely you live in a state that you pay some kind of state tax. This calculator just calculates federal and self-employment tax for you. It does not calculate your specific state tax. So please keep that in mind. Do a Google search, see what kind of taxes you have to pay in your state, and if you can pay estimated taxes for your state. Okay, for those CEOs out there that are single and have a Schedule C or just a business you put on your tax return, or if you're filing separately, married filing separately also can use this calculator. When you look at each tab, you're going to see the estimated tax due dates. This is just informational. So you can see that April 15th is when you want to pay by when you want to pay January 1st through March 31st. And here's the amount that you paid. You can just keep track. Maybe you paid $560, $2,500, whatever it is, just so that you can keep track. You want to make sure you keep these receipts and you give them to your accountant, your tax professional at the end of the year or throughout the year so that it does not get lost. Okay, so how do we use this? You want to put in the dates. I went ahead and I put in for the first quarter, January 1st through March 31st of 26. These are the dates that I'm working with. I'm going to come in here and reuse this calculator every quarter or whenever you want to pay an estimated tax. So you want to go ahead and put the dates in. What's your total business income so far from January 1st to March 31st? So as just a simple example, let's say you made $50,000 so far this year. First of all, pat yourself on the back. That's fantastic. Maybe you made $1.5 million. Maybe you made $3 million. Maybe you made $500,000 or just $50,000. This is all great and amazing. I just want to stop and give you kudos. Your operating expenses. So hopefully you're keeping track of all of this using some kind of software like QuickBooks or Wave or something else so that you can just plug these numbers in, pull your profit and loss and plug them in. So your operating expenses were $35,000. That means you had a net profit of $15,000. You can see I have a blue cell here. This means it's a formula. The white cells is where you can enter data, and then the orange cells are taxes that you owe. The next line is self-employment tax. So we're looking at 15.3%. Again, you're not an employee, right? So you have to pay the employer and the employee tax, which is for Social Security and Medicare, 15.3% of your net profit. So the nice part is that as a business owner, we get a lot of tax incentives. And one of those for a single LLC, for example, would be half of the self-employment tax is deductible. So really you owe at this point, if you made $50,000, $35,000 in expenses, $15,000 net profit, you owe about $1,147.50 for self-employment tax because it's half of this. Then I do some more calculating, calculate your adjusted gross income, and then we put this into the tax brackets for your federal amount owed. And what this is going to do is tell you how much you owe for the federal total, 1,414.30. And this down here is the total estimated taxes owed, 2,561. So this, when you go to pay, go to the IRS's website, and I have some instructions here. Go to IRS Direct Pay, make a payment, and you're going to pay to your individual 1040 because this is a pass-through entity, right? Everything here is a pass-through entity. Unless you're a C corporation, you're a pass-through entity. So you're going to want to pay your individual estimated taxes. You're not paying into your business. You're paying to your individual bill. All right, so that's your total tax. So if you're going to pay that exact amount, you want to put it in here, and you want to go ahead and send your payment. Maybe you want to add another tab and keep track of, paste the receipt. Let's jump into married filing joint. So what's different here? This is where I run into a lot of incorrect estimates when I do this for my clients if they're married filing joint, because we're not taking into consideration their partner's wages. So what I've done this year on the calculator is take into consideration your partner's wages. How do we do that? So you're going to want your partner's last pay stub from ending on 3/31/26 or thereabouts, right? These are estimates, okay, not exact numbers. Let's say from January 1st to 3/31, they made about $30,000 gross on their pay stub. It says a year to date, right? It tells you how much they've made. You want to put in your partner's wages. Again, white is enter data. You want to put in your business income, your business expenses. These are just example numbers. And then we're going to get a net profit. There's a formula. Here's our self-employment. Again, 50% reduction. And our taxable income is now going to be something that's more in line with what, and now you're going to have your taxable income. This is going to be more in line with what you're actually going to pay, because you have to remember that the money that you make in your business, if you're married filing jointly, whatever your partner makes and whatever you make, it all goes together through one funnel. And that's the most important piece here. So what do we want to do? We want to calculate how much taxes you guys owe together. And then we're going to subtract what your partner has already paid on their W-2 pay stub. So again, you're going to subtract what they've already paid year to date minus the federal taxes paid by the partner. So I'm calculating here their wages plus your wages. And then you're going to subtract what's already been paid so that the taxes owed are subtracted from here. So the 13 minus 4,800 is going to be this plus the self-employment tax. Sorry, that's a little confusing, but it is, you look at the formula, which you can, it's the half of the self-employment tax is $6,000 plus the 13,000 minus the 4,800. So we're already taking into account what your partner already paid. Okay, so you would owe 15,000 in this example as an estimate for Q1. All right, head of household. Head of household, pretty much the same thing as single. It's just that your percentages are different down here, so that's why I separated it out. All right, let's jump into S corporation. So let's say you are an S corporation single filer. You can see this is a lot smaller. It's a lot short. It's a lot. You can see this is a lot smaller of a spreadsheet. You're going to put in the dates to and from. Again, the white is enter data, blue is formulas, and orange is taxes owed. This one is much simpler. You're going to put in your business income, put in your operating expenses. You're going to have your net profit here, which is going to be your taxable income. That money is going to be dropped into the brackets, and it's going to give you a total estimated taxes owed. This is probably the simplest. Why is this the simplest? Because you are paying yourself as an S corporation owner. You're paying yourself payroll. So that's going into your expenses here. It's not separated out. Married filing joint for an S Corp. The only difference here is that we are again adding your partner's gross wages at the top, and we're subtracting how much your partner has already paid in taxes, okay, to give you the estimated taxes owed. And then again, a head of household is very simple. It's just different brackets. So if you do head of household. Okay, CEOs, that's what I've got for you today. I hope this calculator is helpful. Again, download it for free and follow me for more CEO. And follow me for more while we solve CEO level problems. And follow me for more CFO level. No. And follow me while we continue to solve more CEO. No. And follow me for more as we continue to solve CEO level problems. See you next time.